Good afternoon. Today is Friday, December 18th. Today we're going to be going over a trade review we did on the SPY. We're going to take a look at the weekly charts on the SPY, but also the IWM, the XLF. If we have time, we'll do the transports. We'll also be looking at the Qs. Let's get into all of this. Okay, a little bit of housekeeping, just like the last video, the last stream we did. We are trying to help raise money, trading for a cause, toys for kids. We're at $1,100. Our goal is $2,000. I'm going to tell you right now, we are going to meet this goal in one way or another. We'll put it up on every video. Anyway, glad to be part of that. So thank you to the group. Thank you to all of you who have donated. So generous. So let's get into it. We had a trade alert today, and so... By the way, if you guys aren't part of the group, rtbtrading.com, and do me a favor, do not take any of these trades because they are no longer relevant. But just to show you what we're doing here, rtbtrading.com, you get a 1-week trial. If you gain value out of that, that's great. That's what we like to see. So today's trade, we didn't have a lot going on today. It was option expiration date, infamous for this Friday to see a whipsawing action in the SPY. And you saw a little bit of a price adjustment accordingly. And so you can kind of tell the difference with the futures versus the SPY. You can kind of see what was going on. This was today's trade, just one trade. We went long on SPY. We chose an option contract expiring on the 21st. And by the way, I would never take a trade. Well, first of all, at the end of the day on a Friday for a swing trade. But second of all, I would never trade an overnight contract. Or even a couple days contract, or even really the week of contract. I always go with contracts that are usually the next monthly contract there is. And so right now I'm usually trading the Januaries. So anyway, day trade on that one. We got it for an average of 88 cents. And I think I have it on here. Let me see here. We closed it out at 12.54, around 12.54. So this is kind of, nope, that's not it. That is not it. Is this it? This is it. Okay, so 29%. It doesn't always happen this way. This is just the way it worked out. The trade setup presented itself, went long, posted it, posted the exit. That's kind of all we're after. They don't always work out this way. Today's trade was very, very clean, and it kind of gave us the trade, so we took it. Okay, so Thinkorswim frame, here we go. I'll kind of show you guys a little bit what we were talking about. You see this trend line. We've been following this trend line. And the funny thing is that last Friday, which I believe was in here, one of these two dips, that might have been around here. Oh, here we go. Last Friday, we saw the same thing. It was a very, very bearish day as far as it selling off all day. In fact, that might have been even Tuesday. Anyway, nonetheless, each time we come back to this trend line, we find support and it bounces off the trend line. It works. It's just been working beautifully lately. The problem is I don't want to take this trade as far as a swing trade goes on a Friday. I will look into, we'll check it out next week and see where we're at. But that's the trend line that I'm following right now on the hourly chart. I'm going to go down to intraday time frame so you can kind of see why it is we went long. And let's do this, because you kind of really have to zoom it in here to really see what's going on. And I'm going to do this. Okay, so here's what we're looking at. First of all, you have, like I said, you had this support line coming up at an angle like this, and then you had this support coming across the screen. In fact, I don't mean to keep rewinding on you guys, but I want to show you why we came up with that price. So let's see if we can do that first, and then we will get to where we're at here. Let's go back to the hourly. Okay, now you can kind of see it. I know it's kind of looks like an EKG machine, but let's just bear with me really quick. You do see this price action here where you see where it finds support here. It finds somewhat of support right here. It bounces off of it, chops back and through it, consolidating, falling away from this price area. You get the idea, right? So on this day back here, you saw a reversal candle is again another hammer candle, and then it broke out back above this line. So as far as what I was looking at is, let's just draw a trend line in here. It rallies up here, it pulls back, and it's just coming back in for a back test, right? Well, the funny thing is like I hear there are a lot of people who don't believe that technical analysis works. And so they'll say that, but the funny thing is then it works. But magically, it always comes down to the price that you are willing to pay, and then of course it rallies away from that price. And of course, there could have been some sort of news. I don't really know. I didn't check, but let's go into this. So that's the horizontal. This isn't a prior breakout area. It pulls back to support. Let's dive back into the. Now let's fast forward back to my little 5-minute chart here and show you it's not about just buying it aimlessly or buying it randomly at that price level. We have to have evidence. And what evidence are we going to use? And so personally, what I'm looking at is, there we go. I really want you guys to be able to see it here. What I'm looking at is you have horizontal, you have angles, you have an angle trend line, you have horizontal support at this price of 367.08, and it doesn't have to be to the penny. I know today it looked like it was at the penny. It actually chopped below it like by maybe a penny, but it did put in what's called a reversal candle, and so that's the reversal candle I'm trading against. Once I saw that reversal candle, I entered long with half of a position, and then as price fell back down here, I went ahead and entered in with the remainder of the position sizing. And so what I'm looking at is if price closes on a 5-minute basis below that price level, I'll be stopped out of the trade. That's as close to risk as you're going to get with, granted, it's only a 5-minute reversal candle, but it is a day trade, and that's what we're going for. We're going for a quick scalp 15-minute trade, and we're in and out of that. So now what I'm looking for what am I looking for an exit? Well, we do know that these reversal candles, you have one right here, you have one here. You could say this is probably one up here. You definitely have a reversal candle. You definitely have a reversal candle up here, the high of the reversal candle. And we also have what's called a pivot. And that's another area of possible interest. So what I'm personally looking at is this is the main targeting price. And as you can see, you saw a reaction right here. Not only that, but you had this 200 period moving average, which is the, I don't want to make it sound complicating. It's the 205 minutes, since we're on a 5-minute chart. It's the 205 minute moving average. And so you could kind of count on there being some sort of resistance in that price area, which there was for a few minutes. And that's all it took to get in, get out, close the position. It's a Friday. Who wants to hold until Monday on what's supposed to be a day trade? So that's what we're looking at right now. After hours, it looks like we have a little bit of consolidation on a 5-minute time frame. I would not give any weight to this consolidation. We have to see where the market opens on Monday to be able to discern what is going on. As far as on the daily chart on the SPY, so that was the trade review. In and out, we're done with it. We'll move on. This is the daily chart, and again, now you can see what happened here is price came back to do a back test, and then it rallied away from this. Now, this amount of volume here can be a little bit concerning. More of it happened probably in the morning than it did at the end of the day. But let's just say for our purposes here. For my purpose here, I'm not really looking at the volume. Today is option expiration, so we can see a little bit of movement. You do have at the end of the year, you have a little bit of transitioning from the broad market or the S&P 500 from stocks into or out of the bond market, and that has to do with portfolio managers that are rebalancing position sizing. They're maybe they're allowed to have 60% stocks, 40% bonds, there's a ratio in there, and I don't exactly know what the ratio is, but there might be a little bit of selling towards the end of the year. Let's not forget, it is Christmas coming up here. You're gonna have a little bit lighter of volume throughout or between today and Christmas, probably through Christmas. In fact, I'm gonna go on a limb here and say we'll probably have light volume for the remainder of the year. Because of that light volume, it's possible that we get another rally in what's been called the Santa rally, which maybe today's low was the beginning of the Santa rally. But of course, we could look at 2018. We know that the rally, it wasn't a Santa rally, it was a Santa sell-off into Christmas, and then the following day, the day after Christmas, the market bottomed, and then it never looked back. So, in fact, I'll see if I can pull it up here. Might be on just so you guys can kind of see what I am talking about. And okay, you see it on the screen here. So market goes down, trades sideways, and then sells off. This sold off all the way down into, and the bottoming is 1226. That was the bottom candle. And really the market never looked back until the coronavirus lows. It took out that low, and now we're at where we're at, okay? That's where I'm at with that. So as far as the weekly time frame goes, we put in a new high, we pulled back. We keep doing that. Put in a new high, pull back. Put in a new high, pullback. Where are we headed? Where are we going? It's hard to say that this is bearish. It is definitely bullish, and we are making new highs. So I would say possibly keep buying the dip. The only thing that I would consider is, instead of buying the dip with the full amount of our accounts, we could possibly buy the dip of half of what we are willing to spend or lose. It is probably a little bit more favorable to ease out of some of the longer term positions, or not long term account positions, longer term swing positions. It's probably a good idea, or that's what I did anyways. I started lightening up my swing trades, started closing positions that I had open from November in early December, started closing those. And I want to keep my money, I want to keep it into the end of the year. Maybe your tax reasons or something like that, you would want to consider closing positions out, or losing trades out, or winning trades. I mean, that's up to you. Talk to your tax professional. But I can tell you this, one day we'll wake up and the market's going to be down 300 points on some weird news. Maybe it is a war, maybe it is some sort of oil, OPEC, maybe it's currency, maybe it's the bond market, maybe it's China trade deal. That's something to be mindful of. We've been seeing a lot more China stuff in the news lately, as far as companies that might be delisted, or companies that are being blocked from US exchanges. So that's something to be mindful of. We do know that the trade war was going on in 2018-19. All of 19, it really never was resolved. And I remember there were times that the market would sell off several hundred points on trade war news. And then we of course, the market rallied all of 2019 on the hopes of a trade deal. The trade deal goes through, and then there's talks about a second trade deal. The funny thing is, nothing ever really happened with the first trade deal. I don't know if either country, China or the United States, has been abiding by the terms of the trade deal. I doubt it, since the coronavirus lows. Okay, off of my soapbox. So the market's in an uptrend. Buy the dip until it stops working. Let's sum it up. Okay, Qs. Now, Qs are definitely in the same place. Market's in an uptrend. Qs are in an uptrend. It's definitely bullish. We had a breakout. It would not be surprising to see a pullback, but also would not be surprising to see immediate dip buyers show up in this thing rallying some more, maybe up to 320, 330. You can't give upside targets if there's no upside resistance, because normally when you're buying a market and you buy a pullback, just like we bought this pullback back here, and just like we bought this pullback, you're looking for, well, personally, I'm looking to exit the trade at the next pivot high, or at the highs in general. That's why it was a good idea when we were long this market in this area. I don't remember where it was, but it was in these 3 weeks. We started going long the market. We ride it up to the next pivot, which is this pivot right here. That's the resistance, and see, it pulls back again. And the second time it pulled back, let's give a drawdown of around 10%. This is a very bullish consolidation. It's a market going sideways like this, even though it feels pretty wide. I mean, that's 12% to the upside, 11.5, 12% to the downside. That's the thing, is this can easily continue running, but I would not be surprised to see somewhat of a pullback, and yours truly will be adding on 10% pullback. So if I get another pullback down here, which is relative, because if price keeps rallying here, let's say we get up to 318 area, a 10% pullback might be where the breakout was. So be mindful of that. Let's look at the IWM. And again, this is a weekly chart, so bigger picture. IWM, we might see a little bit more. Definitely in an uptrend. We might see a little bit more of a pullback in the IWM, and this is why you don't have to pick the top. We can wait for it to break trend. There's a lot of room down here where price can run down to, and I'll give you a couple price areas in a second. Price can run down here, back test, and it can still be bullish on the weekly time frame. So it might look extremely bearish on an intra week or a daily chart setups, but it could still be a very bullish chart. Let's wait for the actual reversal candle. What we're looking for is some sort of dark cloud cover, maybe, and by the way, a dark cloud cover is something like this. Actually, that's just a bearish engulfing, so is this one. Dark cloud cover, I don't really even see one on this. This is dark cloud cover, can be. The only problem is you want to see it a little bit further deeper into the candle. It's best if a weekly reversal candle takes out the prior week's lows. That's the best type of reversal candle in my opinion. Possibly tweezer tops. If we saw a double high in here, maybe some sort of setup like that. My best one that I like to use is what's called a a doji candle or a, you know, a hanging man or an upside down, maybe even an upside down hammer candle. And so as you can see, it worked out right here where this is a bullish candle in itself, where price was rejected from the lows and it rallied back up here. And so we're looking for the same thing, but on the opposite end of that. We're looking for the same kind of candle, but on the opposite end. And after we get the reversal candle, then we can look to short the rallies. That's the idea, right? So let's go to we looked at the Qs, let's go to the XLF. And this is already getting kind of long. I saw some news after hours about, I don't want to give any fake news here, but I saw some news after hours about maybe buybacks, was it? I don't, if you know the answer to that, put it in the comment section, please. But I think it was buybacks. What we're doing right now is we rallied up here. We're trading sideways. We're consolidating. We're getting ready. What would be concerning is seeing the XLF. If it started trading below 2780, maybe below 2704, definitely below 2650. But up as it stays up in this area, if it doesn't get rejected, we want to see is a big red candle. If it doesn't get rejected, it's aiming for the, well, first of all, it's probably aiming for $30, between $29.80 and $30. The thing is the longer it consolidates underneath this gap, it's probably going to want to run right through that area and go fill the gap. And if the gap fill is around $30.81, and I know this is getting long, but if we get up to that price, we might as well go up and take out the all-time highs. I believe this is one of the last. There's a few markets out there that still need to get back above the all-time highs, and this is, I believe, one of them. This is the weekly time frame. Yeah, this is one of them. So keep that on the radar for next week. Let's look at the transports. And same thing, you have this consolidation, so it's not very concerning. I mean, this is a 12,566. It could pull all the way back to 11,700 and still be bullish on a weekly time frame. Again, like I said, it might look extremely bearish on this chart, you know, as we come down, as we pull back here. I'm still favoring a pullback, and one of my favorite trades is Boeing, and you know, I missed out. I got stopped out on a Boeing short trade a few days ago, and some of us in the group stayed in it, and I should have stayed in it. Anyway, so yeah, we could see a pullback all the way down here to the blue line, and that would be going down to run a test, 12,000, around 12,000. Let's keep all of these on the radar. I'll feel free to leave a comment in the video. What are you guys watching? What are you after? Hit the like button if you gain value, subscribe button, bell notification. We go live on Sunday, 5 p.m. Pacific Standard Time. Check us out, and we will see you guys in the next video.